As expected, we got a quarter-point interest rate drop.
Welcome back. Stocks are higher right now. Futures indicating a triple-digit gain at the start of trading this morning for the Dow Industrials and the NASDAQ. Take a look. The NASDAQ up 260, the Dow up 324. Interest rates this morning on the move as well. The Federal Reserve, of course, cutting rates yesterday. And now the 10-year is down 2.5 basis points, sitting at a level of 4.056%. The Fed cut rates by a quarter of a point yesterday, as we expected. It was the first cut in 9 months and, of course, the first cut of President Trump's second term. A narrow majority of the Fed board projecting at least 2 more cuts this year. Here's Fed Chair Jay Powell yesterday.
Higher tariffs have begun to push up prices in some categories of goods, but their overall effects on economic activity and inflation remain to be seen. In the near term, risks to inflation are tilted to the upside and risks to employment to the downside. Our framework calls for us to balance both sides of our dual mandate. With downside risks to employment having increased, the balance of risks has shifted. Accordingly, we judged it appropriate at this meeting to take another step toward a more neutral policy stance.
President Trump's recent appointee, Stephen Moran, the only dissenter, he wanted a 50 basis point cut instead of 25 basis. 2 more policy meetings left in the year. The next one takes place.
Yeah, so that means that when Trump gets to put somebody else in, it's going to lean more aggressive, right? In terms of cutting, for sure, right? I mean, we'll see where we're at when it gets to that point. I mean, again, he put in Jay Powell and he's not liking what's happening here with his own appointee, right? So it's like he can put somebody in, but then they can be like, actually, politics, right? And again, people are saying, make sure that the Fed is independent. That whole talking point. Fed independence, Fed independence, Fed independence, is like that talking point. Look at this. You think that this cut wasn't political? Of course it was. It was right before the election.
Bank stocks.
It's all political.
Like
it all is.
Surge yesterday. The rally continues this morning over, of course, the Fed, as well as we're looking at Wall Street's fear index falling nearly 4%. J.P. Morgan Chase CEO Jamie Dimon meeting with Senate Republicans yesterday in a closed-door lunch on Capitol Hill. Florida Senator Rick Scott inviting him to brief them on the economy. Joining me now is former Federal Reserve Board nominee and Independent Institute Senior Fellow Judy Shelton. Judy, good to see you. Thank you so much for being here. What did you take away from Jay Powell's commentary after the cut?
Well, I'm happy to see that the Fed is finally resigned to moving away from restrictive interest rates. And by providing more access to capital for small and medium-sized businesses, they've been the ones squeezed out by the high cost of borrowing. We finally have in place this aspect of the Trump economic growth agenda, which is that access to capital to fuel the entrepreneurial energy so we can carry out this transformation that focuses more on Main Street than Wall Street, and that provides more opportunity to be involved in achieving prosperity for Americans across the spectrum. So it's about time. I think they should have gone 50. But they finally have Steve Myron, so they get a supply side perspective, which they need, because the Fed is dominated by that Keynesian thinking that thinks government knows best.
Yeah, and rather than looking at the expected growth and what could come, what is the timeline, in your view, Judy, in terms of when the cut starts to really impact people? And do you expect this to be the first of 2 or 3?
I would think 3. Total, including yesterday's, through the end of the year. That would be minimal. But I think the effect is almost immediate. We certainly see that financial markets like it because it is pro-growth. It's the missing element. And so finally, we can proceed on what I think is a very optimistic path of high growth. I expect better than 3% growth going through the end of the year. And what we want to do is increase the supply of goods and services. And when you have fiscal policy that is stimulative, and the Fed tries to restrain that through restrictive interest rates, all you're doing is empowering government at the expense of the private sector. And the supply side program of lower taxes, less regulation, better energy and trade policies is precisely the way you reverse that, but you absolutely have to empower entrepreneurs by letting them borrow at reasonable cost so that they can expand plant and equipment, so they can hire more workers. That's where you get the real growth.
Absolutely.
Yeah,
because
and
you're talking about long-term plans for spending and capital plans. So let me get your take on that too, Mark. I mean,
and it is restrictive. And if you loosen it up and you get lower rates, more people are going to borrow and do exactly what they're talking about. They're going to borrow to start a business. They're going to borrow to invest more in their existing business, right? All that kind of thing, which could mean hiring on new people. Any way you put it, it's borrowed money that gets put back into the economy. That's economic growth. No different than with the housing market. It's like, okay, they raise the rates like crazy, and the result has been the market is just at a complete stall. Like, that's what it feels like. It obviously, it depends on where you live, right? Real estate is local. But for me, where I'm at, it feels like a total stall. It's not like there's literally zero transactions happening, but compared to previous years, it feels like nothing's happening. And a lot of people, especially sellers, I imagine, are antsy about it, right? Because they have a house that they want to or have to. That's the part that would be even worse. If you had to sell right now, yeek. You don't have to sell right now. Don't sell right now. Is not the time to sell. Now, in my opinion, is the time to buy, because desperate sellers are dropping their prices, right? Market is saying prices are dropping. And that means that sellers are willing to negotiate. Buyers can put in lower offers. Comps are coming down because of that. So housing prices are dropping. That's been happening in my area for 2 years. And you see it now starting to hit a lot more areas of the country. I mean, I think that that's a good thing. That plus the drop in interest rates, just as it'll just continue to drop, that will definitely help spur the housing market. It will. It'll help just get things back going. And the real estate is slow, so it's not some immediate thing. There may be some type of bottoming, and then eventually, it could be back to the races, or at least by the time you see that it's back to the races, and we see how slow media is to pick up on all this stuff. They didn't start talking about price drops in Florida and Florida's tanking and all that, prices crashing in Florida. It was a pretty recent thing, but yet it's been happening in my area for at least 2 years. At least 2 years. It's kind of interesting. You got to be on top of it yourself, and you have to just see the cycle and see, okay, well, if this happens, then this is probably going to happen. If this happens, this is probably going to happen. Why? Because you know how this kind of stuff works. You see the cycle before, right? It's like, okay, well, once they started raising interest rates, it was like someone slammed the brakes. I mean, that the second they started raising interest rates, that was the beginning of the end here, and it was pretty fast. It felt fast. And it was like we were at a peak, and housing was kind of like this at the peak, and then it's just been, it was like it was trying to hang on, but it couldn't. And it's just been like that ever since. And now, right now here, it feels like we're at a place where it's trying to buck back up, right? It's trying to find a bottom, find its footing. That's what it feels like here. Is that what's going to happen? Is it just going to, bear flag and then drop right back more? Or are we going to have a reversal? We'll see. We'll see what happens. I mean, if they keep cutting rates, if prices come down, but at a slower rate, and interest rates keep dropping, I think it'll find its footing.
I mean, yesterday we were talking about the possibility of a cut in capital gains tax in a reconciliation package, part 2.
Yeah.
If we get more cuts from the Fed and we get a reconciliation package that includes a cut in capital gains tax, wow.
Well, and that's what President Trump's been talking about, how we were a very sick country a year ago, and now all of a sudden we are incredibly strong. We are setting the stage to become even stronger, obviously.
Right, that's the part. That's the part.
Businesses will be using that to invest, to hire more people, which should help the labor landscape. We just saw, according to Bankrate, the 30-year mortgage
how it
is
works,
now down
right?
6.4%, which is down from like over 8% maybe a year and a half ago.
That's big.
And mortgage refi applications were up over 50%.
Yeah.
Now compared with last week, which is phenomenal.
Yeah.
So we're already starting to see consumers and businesses take advantage of these lower rates.
Because all the people that bought into marry the house, date the rate last year and the year before when rates were 7, they're all going to take advantage of this. Oh, I mean, I bought this house last year. My rate is not 7. My rate is still a little bit lower than what the current interest rate is. So I'm still just sitting tight. I got a good rate. For the timing, I got a good rate. But if they come down, if they start going into the 5s, that's when I'm going to start looking into potentially refinancing. It's like, yeah, why not? If I can go from 6 to 5, or I mean, hey, we'll see what happens. We'll see what happens. For me, it might be a year. For someone that bought at 7, they may be looking now. But if they keep on lowering 2 more times the rest of this year and then a few times next year, maybe next year around this time, I start looking. We'll see. I mean, we'll see what happens. We'll see what happens. Who knows? But yeah, if it starts dropping, I will definitely refinance. Why not? I mean, I've had higher interest rates than my first house was 7.375. I don't know if I'm sure I've said this on the channel before. My first house was really high and it didn't scare me away at all. I was like, yeah, I'll take it. Yeah. I paid double on the house. It wasn't affordability was not the thing. It's because prices weren't crazy at the time. I mean, at the time, did it feel like it was crazy? A little bit, but it felt like it was going to get crazier when I bought. When I bought my first house, it felt like housing in this area isn't going to be this price much longer. Like, we're getting a deal right now because things are about to take off. That's what it felt like. This was in 2017.
Love it. I think you got to buy stocks if we're seeing all this play out in the fourth quarter. Am I right?
And probably consumer discretionary, right?
And meanwhile, Judy, many economists are putting focus on the Fed independence as fired Fed Governor Lisa Cook was at the meeting. She remained. She was a voter. A court, of course, blocking President Trump's efforts to remove her from that position. I spoke with White House Senior Counsel for Trade and Manufacturing, Peter Navarro, yesterday on this. Watch this.
It hurts our trade balance. It hurts everybody who's trying to get a mortgage. It's frozen up the housing market. It should be 50 today, and it should be another 50 at the next meeting.
That would be a lot.
Disaster. People talk about an attack on Powell's, an attack on Fed independence. It's not. It's Fed incompetence. And Lisa Cook is part of that. Maria, you know that I was sent to prison for defending the Constitution. I was in prison with people who did what Lisa Cook was alleged to have done. And they were there for many years, and they had their houses seized and their businesses seized, and they're paying restitution. This is not a slap on the wrist what this woman did, and she shouldn't be on the Fed right now.
Okay, now hang on. In terms of this whole, because this is part of what is sparking this whole Fed independence, big neon sign that everyone's throwing around, is this whole Lisa Cook and Trump coming out and saying all this stuff about she should get rid of her, all that kind of thing. First of all, I think he can say what he wants to say. I think that he can say what he wants to say, whatever. But my issue with this has to do with it's alleged. If this is true, if it comes out, and I don't see how we can't find out this information right now. Like, why can't we find out if she bought 2 primary houses and got special deal rates because of that? Why can't we find that out now? That should not be hard to find. But because it's politics, because it's all politics, the Fed included, it's all politics. And it's all, like positioning and grandstanding and virtue signaling, right? It's all that kind of thing. It's just a show. It makes it just a circus, right? It makes it a show, which politics largely has been for a long time. It has. It's largely been a show for a long time. I don't specifically feel like that has to do with one side or the other. I don't think that one side is the show and the other side is trying to make it. I think that it's both of them. I'm saying politics as a whole, both sides are together and in on the show. They're all in on it. That's what it looks like to me. I've been alive and had both sides in power. It's all a show. So it's like this kind of stuff. I wish that there were more action. When action happens, then I'm like, okay, cool, great, good. But that's my issue with this whole Lisa Cook thing, is that it's alleged, and we should be able to find out that information immediately. And then, yeah, she should lose her job. Then it's like, okay, see, that was justified. That was totally, called for. But to, have an investigation, instead he's saying, hey, she should lose her job because of this alleged thing. And it's like, well, no, have the investigation. And then depending on what happens in the investigation, she loses her job or not. That's what I think. It's like, have the investigation. But have they had one yet? Have they? I don't know what's going on with it, but that's what I think about this.
Judy, your reaction?
Well, as President Trump has said, the independence of the Fed is important, but he said they should listen to smart people. And he counted himself, and I would too.
Of course he would.
I recently met with some big names in the construction industry.
Listen to somebody, right?
And commercial real estate, big developers. They were not interested in this soap opera about Fed independence. They were interested in the mortgage rate. So I'm very happy that Treasury Secretary Scott Bessent is calling for foundational reform, not just the tenets of monetary policy itself, and whether stimulative or restrictive rates deliver a better economic performance than harnessing free market forces. I would say no.
By the way, all this conversation about Fed independence, I would argue that Jay Powell broke Fed independence a long time ago when he actually got political, coming into the job, immediately coming up with DEI rules and climate change rules, and then cutting rates right before a presidential election. That just doesn't come up when we talk about this issue. But,
I'm just saying, it's political. You're being dishonest if you're saying it's not political. It is political. It's all political. You're being dishonest if you think it's not political. If you think that he's not being political, it's all about politics. All of it is. It's all about politics.
It's great to see you. Thank you so much for your work, Judy Shelton, and we'll be right back. Stay with us.
Yeah, okay. So there it is. So, yeah, quarter point. I mean, obviously, it's better than nothing. It's better than nothing. Should they have done a half? Maybe as a kickstart. Maybe you start with a half and then you do quarter points after that. But it's all whatever. And again, I think it's baked in. It's been baked in. Rates already came down. They're down to what? Let's see what they are right now. 6.15. That's good. I think that's what I have here. And I bought this house a year ago. So I got lucky. I bought when there was a dip and we were able to get it down a bit lower. Yeah, that's what mine is. So I think that's good. If we can go another full point, if it can get down to 5, then I'll start looking at refinancing. Yeah, stimulating the economy. More money in the economy for people to borrow for their projects, for their businesses. That's just more money in the system helping build. We've been restrictive for long enough.